All right, we are live, and let's see if we get this tweet out. Very good. All right, I hope everybody had a awesome trading day today. You know, it's always fun going back and looking at the charts at the end of the day and being like, oh, wow, that wasn't so hard, right? But, you know, intraday, it's a little bit challenging because, I mean, we saw futures like screaming up, screaming back down, screaming back up again, you know, and just kind of hard to keep pace of all that, and you know, and then you start getting used to like these really like fast-moving markets, and you know, when you have a slow day, you have to be really, really careful not to overtrade, right? So that's one of the key things to keep in mind here. But that is what the importance is of having a game plan, right, and having a set of strategies that work for you, that keep you consistent, right? So this is pretty amazing, right? Now this is all working out right now on the S&P cash. We have remember we had that whole channel going through the entire year, right? We tasted 1, 2, 3, 4, kind of broke down a little bit, came back in. And this fifth time was the charm, right? As it broke that channel back down. It also corresponded with pitchfork support, and then there was also off of this main trend line right here, off of this pivot, right, there was another reaction line right here, and look what happened as it finally broke through there. We had the greater range pitchfork median line that just broke. So now the question is, how much farther can it go? Well, certainly I think it can test the bottom of this pitchfork support here. It's kind of matching up with like the end of the year or early next year. So this 2300, you know, 2325, 2333, that kind of level right there is looking, you know, pretty possible. And so which is actually pretty amazing, you know. Imagine being short like, you know, up here somewhere. But anyway, so what we've seen so far is we have a wave 1, right? Then for wave 2 we have A, B, C, right? And so right now we're working on wave 3, and like we talked about yesterday, is we're probably in a wave 3 of 3 going down. So this would be 1, right? Minor wave, right? 1, minor wave 1, 2, and then working on 3 right here. Now 3 can go as far as it wants to, right? It's got no restrictions as long as it's not the shortest wave. But we talked about last time, right? We copied this here, brought it over here, right? So it's almost reached the exact same length of wave 1, right? Just about, right? And so odds are it's probably going to be a little bit longer than that, maybe a lot longer than that. We don't know, right? So, but either way, the trend has definitely changed from the broader picture so far. A lot of things are breaking down long term, right? So, so we'll see. And, there's a chance of a recovery, right? It could put in a corrective pattern, right? So if this is 3, it could put in a 4, right? Now 4 is never going to overlap wave 1, right? For this wave count to be correct, it can never go back in the range of wave 1. So, so if wave 4 is going to start, right, it's still going to fall short of that guy right there, right? That's one of the rules, right? So as long as that's the case, we might see a rally, and that would make sense, right? Because we have median median support right here. We could definitely see it bounce, possibly pitch for it, and then everybody would be like, "Oh, it's all over," you know, Santa Claus rally, you know, whatever the case is, and then, you know, who knows? It could rally up, and then right at the beginning, then they might start, you know, get some headlines in the beginning of the year. Oh, 2019 is going to be the best one ever. You know, there's 20% to recover and all that stuff, and then douche, right? And then we get a wave 5 down, and that, you know, goes even further. So, so we'll see how it all goes. But in the meantime, it seems to me the best strategy so far, just intraday, has been shorting any rips, right? And so it used to be buy the dip, now short the rip, right? NVIDIA was one of them, right? It was let's see, I was chatting with Clayton earlier today, and definitely made sense, right? So let's check out the hourly here. You know, it's funny that I didn't have a position, and I've been calling 116 on NVIDIA for over a week, and I just, you know, I had like a small put position on it, took it off and all that stuff just because of the, you know, all the back and forth action. But that's the thing, you know, if you really committed to a trade, you know, the other day when this thing was coming up, I think I had the put like over here. The other day when this is going up, it felt like, you know, when it won this 150 area, I was like, no, I don't feel so good about it, right? And then it retested, no, I don't feel so good about it. But, you know, it turns out we were just in this kind of channel area, and now we're breaking down outside of the channel, right? So now it's like starting to feel like a lot easier. And guess what? Those put premiums are a lot higher now too. I mean, 116 is even in the visual screen right here. So definitely worth watching, definitely interesting. You know, lots of good stuff, lots of things happening. So I just kind of want to touch on real quick the We had a lot of 60 anchors yesterday, which is really cool because the yesterday when the market was just kind of really free falling for a little bit, there was a recovery, right? There was a bounce at the end of the day, and then usually that will give you an inside bar, right, at the low end of the range. Now you got to kind of think, what am I setting up here, right? So everybody's heard of hopefully the measured move, right? If you haven't, what it means is, right, if you look for a measure, and I've tweeted it out like on Splunk the other day, things like that. So measure move, right, that's the first move of a big bar. It pauses here at the low range of the bar, happened to pause again twice, but look, a measured move is almost, you get like almost a duplicate bar after a pause or two, right? So you duplicate this here and boom, just like that, measured move, right? So if you ever hear that term, that's what we're talking about. So I should have probably even been more specific about that and sort of thought about it a little bit more. And it finally hit me after I missed a trade this morning, and I'll show you real quick. So Nvidia, right? Look, kind of didn't gap up, right? But it took this long, right? But I wasn't going to take anything long. I was going to look for a good opportunity to short. Look at that hit right there. It hit its hourly 8 simple moving average and then bounced right off of that. Came back in. One possible area to short was right here, right? And then could have shorted that there and for halfway, but it wouldn't have worked out really too well with options, right? So this morning I actually shorted Netflix, and should have thought that there was potentially some measured move, but the reason it wouldn't be a perfect measured move, because look where it did. I liked the fact that it was a red, almost a red, it was a spinning top, but mostly close to a shooter inside here, kind of at the low end of the range, but not the super low end of the range, right? So I was looking to short this. So I actually, this morning, it kind of came up and only hit the 5 MA here, and I shorted it as it came back in the range and got a pretty good scalp off of that short, off of that 60 anchor. Ended up playing out over here. I was like, oh man, I wish I held that. But it is what it is. Markets, they could reverse, and you want to preserve profits, right? You want to minimize losses and preserve profits. So it could have been bigger, but it is what it is. I did look at Tesla because that was the only one out of the FANG stocks that I noticed. Twitter was too. Oh yeah, Twitter. Goodness, that's another one we got to look at. But Tesla was perfect, right? And it also kind of faked you out a little bit too. And those are the ones you really want to look at, right? So when they close green like this, so this is the 60 anchor from yesterday, look how close to the low end of that range it was, right? So that's going to imply a potential measured move, right? And it also closed green, which is interesting, right? So that kind of, right there, it kind of took out a few shorts that were looking for, a short move into today. Right, so like you'd have to think it's like, oh man, Tesla's going down. I'm going to short right here, and then just goes up like 3.74 points, right? So a lot of people probably close their positions right there, and then where do we open today? We gap down, right? And so I was watching this, but for some reason I didn't process that there was a measured move potential here, and it really was better measured move potential than Netflix because it was at the low end of the range. Right, Netflix is a little bit higher up, and look at that, and that green kind of shows you a little bit of a fake out right there, which shows that it could be, even more. And so anyway, I was watching it, and then I just switched over to Netflix, but you could see here, kind of came back up, look, it barely went into the range, right? Gave you a little bit, tested just the low end of that range, couldn't even get to the real body, right? Couldn't even get to the real body of that candle, and so the real short right there would have been like, okay, it's really weak, it's not doing it, the market's coming down, right? Let me short it right here. Right at that level, that 329.74 or whatever, that level right there, and then boom, I tweeted it out like 10 minutes into the trading day, where it was down 9 points. I mean, it was just would have been a fantastic short at the open, and I totally missed it, right? And then Option Sniper is type it out. He's like, oh yeah, those puts from yesterday are doing great, I don't, in these type of markets I don't really like holding anything overnight, but that was definitely tradable at the open, and should have caught it, missed it, but hopefully now we can all learn from that, and you guys can see that there was a nice measured move from that, and it actually went even further, right? So you had one move, nice pause with the fake out green bar, right? Makes everybody think, oh, it's going to go long. No, it's going to go short. Look, measured move down. Look, it even went even farther. Went down, what was that 314 all the way up to 311. Goodness gracious, what a great move today. I gave you some other entries too. If you think about it, you had an inside shooter right here, never took out the top, right? And you could have held that all the way through. I know it's hard to hold through all that stuff, but you look at the end of the day, hindsight's 20/20. But the reason we go back and we review these and we journal these so we can start getting used to the setup, so we can be confident in our trades, right? And that's the key, right? We all have a chance of being really successful doing this, but we have to be disciplined. We have to have consistency, right? We have to have a strategy that works for us that we can stay with, and we have to be able to minimize losses and maximize profits, right? And preserve those profits so we can keep going, right? And then we can analyze these and start to ingrain these type of movements in our mind, so we know that when they occur again the next time, we'll be much more confident holding it through, right? And of course, just moving your stops. I mean, even right here, look, nice move, $9. You could have moved, taken some off, moved to stop there, stop there, stop there, and then you might have gotten stopped out here, but that would have been a fantastic day right there, just on Tesla. And then Twitter too is another one. Now I didn't look at this one, and I really need to start analyzing these. I just don't have as much time as I'd like. But Twitter did the exact same thing, and it was even better because, well, I mean, it's not better because Tesla just moved, so it's huge. But it just was awesome. I mean, look at that inside 60 anchor, right, to close. Look, tested the range. The low there was 32.70. It ticked all the way up to, I'm sorry, yeah, 32.72. It went 2 cents into the range, into this inside 60 anchor range. 2 cents into it, and then just reversed. And guess what happened? Technical analysis and news were in sync, and those are the best times to be in a trade, right? You can't beat the news, right? Because we don't have that type of information, ahead of us, so we just don't exactly know. But that's why we trade the best technical setups, because when the news does come out and you're in a position, then you can really capitalize on it, right? So if this was on the game plan, or if somebody caught this, congratulations. But there you had a nice inside 60 anchor, 2 cents in the range. You could have shorted right there, and then boom, Citron comes out. Everything, you saw everything was going down anyway. Citron comes out and says, Twitter's going to $20, and then flush. It was just fantastic. And then then there was a 30 break that you could have done all the way down to 28. I mean, it was just, Twitter was great. And I've had a bearish sentiment on this for a while. I mean, you can go back to my my day charts here, and just I have the head and shoulders thing working. I was working on Elliott wave count 1 2 3 4 5, and then A B C 1 2, right, for almost like a zigzag correction. And then now it's working on this, thanks to Citron today, is right at a reaction line, back into pitchfork range, and hopefully going to break this neckline of this head and shoulders pretty soon to break 26. And then it could definitely get to his target of 20, right, here. But I really thought that if this was a wave 1 down, right, 1 2 3 4 5 for 1 2. Now it's extended a little bit farther. I thought it was gonna drop sooner than that. But a 3 down, right, we just talked about, has to be at least the same size of wave 1, right? Well, as long as it's not the shortest wave, but typically it's at least the size of wave 1. If you have that, going down, then I was seeing this thing going all the way back down to this, well, here it is right here. I did 100, 1.618 extension, right, of wave 1, and that would be a sensible place for wave 2 or even wave 5. But either way, it looked like it was going down to about 12, and so that's why I came up with that. If you saw me tweet out this morning after Citron, I was like, well, glad he said 20, because I was saying 12, and that's why, right, just off of that Elliott wave analysis right there. So yeah, so that kind of gives a little bit market overview. Goes over the 60 anchors, and a few ones that traded really well today. And then real quick, I just want to talk about one new candlestick setup. Actually found a couple examples here. So another candlestick setup that we have is called the dumpling top, or the fry pan bottom. And all it is you look for a setup. It helps you identify a top. And what you do is you find kind of like a curling pattern. And here's one right here. Let's zoom in here a little bit. And what it is it's a curl over with a gap down, right? Curl over with a gap down. And so that's sort of like the little shape of a dumpling, right? Kind of like curls around and then boom, gaps down. And so that's your key right there. And then so when you see that kind of curl over gap down, then you can look for some more downside. And look, if you had your stop here on Apple, you'd have seen as soon as it came back up, guess what it did? It put another dumpling top in right here, right at a reaction line. Look at that. There's a reaction line here, reaction line here. Imagine that. And so here, right, gap down, hit this median line of this pitchfork, dumpling top, curl over, gap down, right? Well, here's the gap down, and then more further gap down, right? And then continue. Now from there, it didn't stop, right? So you start combining this stuff with Elliott wave, all these little tactics, you know, and you could be like, oh wow, this is great. And then so I had calculated a wave 3 there, you know, for Apple, and then then back here, right here, it's kind of like another one that didn't really quite gap down so much, but here it did, right here. So dumpling top, gap down, further downside, right? Dumpling top, gap down, further downside, right? So pretty fun to play with those. So that's a candlestick setup that you know, worth paying attention to. Dumpling top, gap down, further downside, right? And so now we're heading down this reaction line, and yeah, so I'd calculated, remember the other day I went long after hours at 163. It was a good solid number to look for a reversal, and it did. You know, we gapped up the next morning, it was great. Unfortunately, no follow through. And now we're getting some further downside. So my count might be wrong, you know, and that's fine. That's the thing about Elliott wave, is like, you can only go with what you see. You can only go with what you know, but it does have predictive power, because using your Fibonacci's, you can predict at least where the maximum, if your wave count is correct, where your maximum amount is, right? So, so I kind of figured here ABC 4, and now 1, 2, working on a wave 3 for Apple. And so just to kind of show you real quick, so if that was the top of the minute wave, duplicate drawing, move that to, so that'd be 1, 2, and then 3. So just if it were the same size of wave 1, we would at least expect Apple to get down to 150, right? And then that makes sense. It would travel down the reaction line to 150, and then you might get a reversal. And 150 is a good good number to bounce. You saw those whole numbers, right? You saw Netflix 250, right? Dun, 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 dun. Let's not show me the magic number, but anyway, 250 was where it hit to the tick, right there, 250 even, and then bounced. And so, so I'm expecting Netflix to break down too, right? 1, 2. Could still be working on a wave 3, unless this was the. Remember, I tweeted earlier. I said Netflix is pretty complicated. 1, 2, maybe here. 1, 2. Could be working on a wave 3 still. I think Netflix has got lower to go, and I don't see why not. They're blowing so much money on their like Netflix studios with, that whole thing. This thing could really see some further down. So I don't see why it couldn't get below 200, right? I think there's a gap to fill down here too, or that's just a monthly. Let me see. I'm pretty sure that was a gap. Yeah. So you got a little gap down here that it could fill, and I don't see why not, right? Could definitely do it. Anyway, so that was a dumpling top, and then there's a fry pan bottom, and I've actually put one of those in it too. It's the opposite of the dumpling top. That's where you curl up, gap up, and then continue up. So let's just kind of look at that pivot back there and see what has happened before, right? Curl up, gap up, continue, right? It used to be, the other one was dumpling top. This is frying pan bottom, gap up, continue. You see that a lot, right? Curl over, gap up, continue, right? So these are just little things we can look for, for reversal patterns, or to show that a pivot is really in, right? We can look for those two candlestick setups. So that's all I have. So we reviewed market, we reviewed the 60 anchors and how it worked on Tesla and Twitter, and it worked really well on both of those today. We talked about how awesome if you have the right technical setup, and if you're in a trade, sometimes the news then jumps in while you're in it, because the technicals usually forecast, or at least imply that something's going on behind the scenes. That's why their setups are there, and then the news comes out and confirms the technical setup, essentially. And so that's why we love trading, and that's why we keep doing it, because we want to be a part of those big moves and catch the right parts of these waves and the different techniques and combine them all together. And as traders, we trade because not only do we, obviously everybody wants to be successful with it, but we really believe in our ideas, right? And so and that's important, right? Because if anybody's trading and they're doubtful about what they're doing, right, they probably shouldn't be doing it, right? They shouldn't be trading. They shouldn't be putting their money on the line. They shouldn't be doing that kind of risk unless they have those high confidence setups, right? They're very consistent. And so that's a really important part about trading, is that we have to understand that we can control our success in it. And then, we have to believe in ourselves, and that's why we keep doing it, right? And so the more sort of positive reinforcement that we can get, not only from our friends and people on Twitter or our trading buddies and things like that, but also just the positive reinforcement that we get from the charts that confirm that our setups are legitimate and work. That means that every time we trade, when we start taking more, instead of just trading randomly or trading just because something's moving, we look for very consistent setups that work for us. Then we can be successful and really believe in those setups, and ultimately continue to believe that we can really be extremely successful doing this and make a fortune doing it. So anyway, that's all I got for this evening. At this point, if anybody's got any chart requests or questions about trading, happy to feel free to participate. All the participation the last couple of days have been great. So don't be shy to put a chart request in there or just ask a question. Okay, Clayton, what's going on? I know, yeah, totally wild day, and yes, hopefully everybody was profitable. Jimmy, welcome, good to see you. Delasi, how are you? Good to see you. Shirley, as always, doing good. How's your? Let's see, there's a couple that were good. DM was. Let's see how that played out today. There was another one I looked at this morning. Oh, it was saved on my screen. It was one of your gold ones that had really just poked through the median line today. I can't remember. It was the last one you did last night. It was like GDXI or GDA. I can't remember, but it was. I pulled it up. Looked great. Yeah. So here's Dominion. Let's extend this channel out. Extend to the right. Channel 2. Yeah. And just see how that's looking. So right now, yep, still there, but definitely has potential to at least come up to this 20 level at some point. Clayton, we might test 2584 or 2603 before on the SPX within the next 2 weeks before more downside. Yeah, I mean, let's see where that was on here. I mean, if depending how the wave count is, right, we'll know when the wave sets up what's confirmed or not, right? So if this kind of reverses and comes up to this, like you said, was it 2604? Yeah, that's right below here. As long as it doesn't get above it, right, then that's a confirmed wave 4, up, and then pivots back down. Absolutely. So it could, like I said, people could think that this is going to be some sort of Santa Claus rally, and in a way it might be because of how far down we've gone. But could certainly test this median line, which would bring us right back, like you said, that 20 perfect numbers, 2584, 2603, and that would confirm a wave 4, and that you'd want to get short there. Absolutely. If I saw something pivot here, if I saw us come up and put in a pivot below that those two levels that you mentioned, Clayton, 2584, 2603, that's short, right? Because where's wave 4 going to go, right? I mean, at least close to the bottom here, because it could be a truncated wave 5, and then wave 5 could be over here, but more than likely wave 5 is going to extend past wave 3, and I think get to this level here, down here, this 2300-ish level, and then who knows from there, right? This could just be a minor wave of a bigger wave. This could just be, because right, everything moves in impulse waves, right? So this really ultimately, when it plays out, and really launch to the downside. I mean, there's no telling what this market could do, right? But here for the short term, yeah, I think you'll see a fourth wave up at some point here, and then fifth wave back down to 2300, and then that might be just a wave 1 to the downside. And then imagine if we got all the way back into 2018 ranges here, like somewhere in like February. That'd be so funny, right? Because it'd be like the mirror image of February this year. Where the market just kind of plunged and then started to form that channel. Imagine if we got back there, did the opposite, and then just really ripped down. I mean, that would be pretty crazy, right? A wave 2 of wave 1 all the way back in this range, and then a wave 3 would be the whole length of this range, right? Let's say we get down here. We could be in a very long-term bear market. Let's say it came up here, right? And let's say we even got there. I mean, look at that. We could be sometime in, this spring, we could be flirting with the low 2200s, I mean, and who knows what the angle is, right? wave 3 is usually pretty sharp. So even if it's the same length, I mean, we could be down to 2,000 by March, right? So those are good levels, Clayton. Azul, for surely. Azul. Nice one. Let's see, did that form a 2B bottom there? That 2B has got to be a little bit lower, right? I can't tell. No, yeah, the low is right here. But still a nice W, right? Nice W reversal. Yeah, and again, nice cup and handle type scenario. Cup, handle, and ideally you'd want to see it kind of get up, and then eventually break out over this level, this 28 level. And then I think if it did that, I think you could definitely see that that area. But yeah, it's put in a green day today. I imagine the week is now green. Yeah, green hammer week. Tomorrow's the last day of the week too. Don't forget short week next week. Merry Christmas. Yep, sort of cup and handle on the monthly, putting in a red hammer, but might get a little bit higher. And then let's see on the pitchfork. You might see something like that, right? So just give it some time and see if we can get a breakout there. Facebook, Merritt, what's going on? Welcome. Velocity, Facebook, what's going on? Yeah, okay, Facebook. Good old Facebook. Facebook is, having some issues, right? So, but it's strangely kind of, giving us some rips to short for sure. So anyway, we have an inside red month right here. So far, spinning top. We'll see. We got a few days left in the month, a few trading days left in the month. Gave us the other week. It gave us a little spinning top right here, but took out that bottom and then tested the median line of the pitchfork. And then let's see, daily. Came down the pitchfork, nice reversal off of that for a bit of a green trade. Would have been nice to short there at 135, and then get all the way back down to 129. The hourly was a little tricky today, a little wicky, if you will. Inside 60, but shorting there only gave you a little bit, right? Only gave you about a point, which is good, but not great. Then it got just kind of. A lot of things were around this time. We're putting in triple, double inside 60s, got triple inside 60s. But this never went down really with the kind of some of the other market participants. So it's been showing a little bit of relative strength, but it's also not showing a lot of volume either, right? So it's so just give it a little bit there. And the hourly, let's see how that closed. Yeah, well, was it inside? No, low. No, not quite inside. Spinning top right there, slightly on top of the VWAP. But we did have two 60 anchors that I can remember. I believe Google put one at the end, if I'm not mistaken. Yeah, Google did. Pretty sure Amazon didn't. No. But we have Google and Netflix. Both gave us 60 anchors to work with for tomorrow, too. So that's going to be on the game plan that goes out tonight. Just be careful tomorrow, right? Tomorrow's Friday, right? And then we have a short day on Monday, and then we're off on Tuesday. So even playing next week's options are going to be very difficult, right? Because by the time you're really able to really deal with it, unless something really moves over the weekend, by the time you're back into it, it's Wednesday, and you've already seen like a lot of theta without a lot of price movement, right? Unless the futures do something crazy, but something to look at there. And then real quick on Facebook. Let's just go back to the pitchfork area here. Yeah, so that was the thing with Facebook, is that it did come down, right? Overshot the pitchfork resistance. 1, 2, 3. Is it like 3 mountain top there, right? So it's another setup, a triple top essentially, and then back down, right? So that's another candlestick setup there, or a triple top just off of the bar charts. Anyway, and then kind of rip back down, hit the median line, and this is when that news came out that the Washington D.C. district attorney is going to sue him or whatever. So it comes back in right now. It does look like it's kind of bear flagging here a little bit. So so we could see a little bit of a bear flag, type thing happening here. Down, up. So let's see if it breaks down. It needs to get then back below this median line with some sort of authority to continue to give you that the downtrend that we want. And if it did, before the end of the maybe even the week. It could just tomorrow they could just sell everything out. Because if you think about it, like who wants to hold anything long over a holiday weekend? Everybody's going to be going on vacation next week. No one wants to hold longs through this. So there could be a bunch of people, institutions that are dumping tomorrow, and then boom, we hit right here. That would be great. Down to 119. Facebook. Tyler finally caught a live show. Oh, awesome, man. Well, good to see you. Glad you're here. Thanks for your support and checking it out. So hopefully we all learned something. It can take away to become more profitable. Karthik, how are you? Do you recommend any subscription services? It depends. It depends what you're looking for. No, I've tried just about all of them that are on FinTwit. And at least like a free trial of some sort, or just to see if somebody has any like magic thing to offer. And really, there, what I found is I must have tried at least 20 of them. Is that nobody really does have any secret sauce to anything, or holy grail to trading. But if you do a subscription service, do it just to learn, to see how somebody else looks at charts, and that'll help you develop your plan. And that's the best way to do it, right? If you think about it, right, we spend, if you go to college, right, you spend, I don't know, anywhere between $3,000 to, $5,000 to $10,000 a class, depending on what school you go to, right? And if you, you think, you finish an education, you're going to spend, for the most part, most people for 4 years, at least $30,000 on it, right? And trading is one of the, and then you go and get a job, right, to make whatever. And so trading is one of the only occupations you can get into. Now you need to have something to start with, right? And it's one of the only occupations you get to without really having any education, right? You just jump into it and just go, right? And so if you think about it, right, if you spent 4 years just studying and taking different kind of classes in different techniques of the market, you'd probably 4 years later, you'd probably be pretty strong, right? Trading. Now most people go in and they bring a bunch of money in, or whatever, enough money so they can day trade, or whatever the case is, or just even enough just to trade options. They jump into it and they think they're going to be rich and be real successful and all that stuff. And yes, it can happen. The main thing is the attrition rate for traders is so high, and the reason is because they get in, they think they can do it, they oversize, they don't understand risk, and they end up blowing out their account or losing tons of money where they can't really trade anymore, or they need to go back to work, or whatever the case is. And everybody's situation is different, but the point is that they don't even give it the 4 years that a regular college education would train somebody to do even a basic entry-level job, right? And so everybody wants to come and be a surgeon in the market, and haven't put in the time. So yeah, so for subscription services, if you look at it like that, like each subscription service is like a class that you're taking, then yeah, I would say try different things out, and that's pretty much what I did. And I found that each one I went into, everybody had like a little bit different technique, and and all that stuff, and everybody's got a different attitude. And what it ends up happening is a lot of people go in there and they rely on somebody else to make the decisions for them. And if you do it if you approach it as going in for an education, as like just taking an elective class, then that's good. But if you go in and expect them to feed you, and you're paying them, and you would expect that to have great stuff, but nobody's accuracy is out there is probably anywhere close to 90%, and even at 90%, you're still going to lose, right, 10% of the time. So unless you're taking those trades and actually learning something on it, you're honestly wasting money, even if you make money with their trades. So that being said, yeah, there's some good ones out there. Like Trader Stewie is my favorite. Just because he's got a great personality, and he swing trades. I don't swing trade, but I do sometimes off of Elliott Wave. But the way he looks at things are different than the way I look at things. But I do like to see how he looks at things, and plus he's a nice guy. So I do I hang out there occasionally. But yeah, try different ones out. I mean, but if anybody's trying to sell you something like after you get in, right? Like there's like, what is it? There's some services out there. I don't want to go on live YouTube like kind of mess, talking about it. But I mean, there's some ones out there. They make you think that you can make all this money because they act like they've made so much, and then after you get in, they try to sell you all these programs, and then by the time you're done, you've spent like 15 grand, and and you could stuff you could have just read in a book, right? And so that just be careful of any services like that. And that's pretty much all I got. So K-Pac does a great job. I'm sure his service is doing really well. He does some great breakout strategies for options. So I mean, he's probably worth checking out and all that stuff. But again, like I said, if you're going to join a service, just do it as like an elective course in college, in the college of learning how to trade, right? And don't expect them to feed you, right? So because otherwise you'll end up hurting yourself in the long run. Even if you follow somebody for 4 years, if something happened to them, are you going to be ready to trade on your own? And that's really the big question, right? So. Awesome, Jimmy. Appreciate it. MB, how's it going? New here. Would you mind showing how to draw a pitchfork? Yeah, I'll show you real quick. I've done. I'll put a link up. If you go through my, it's a few weeks back. I did a full thing on Andrew's pitchfork. But really, all you do, right? So you find your pitchfork tool, and you just find 3 pivots, right? You just find 3 pivots, and you. I'm gonna just pick a random stock. In fact, let me find one that. Somebody wants me. Surely, let's look at SIG. So for SIG, I'll just start with the pitchfork, right? Now it's a little bit gappy, right? This is one of the ADRs, so it's gonna pick up from it. It's gonna gap from wherever it is internationally, right? But so all you do is you go to the pitchfork tool, and you find pivots. So I like this pivot. I like I don't know, maybe this pivot up here, maybe this pivot here, right? So I pick one, start drawing here. Drag it up here, bring it down here, right? How about there? That looks pretty good. Oh, that looks even better. Oh, that's even better. And why? Why do I do it? So that's a trick, right? And you start to see it a little bit more ahead of time, right? But the idea is that once you find a good pitchfork, you work with pivots, right? And you should be working with pivots anyway when you're trading, because you know that if you take out this pivot, you're probably going to go up, right? If you take out that pivot, you're probably going to go up. If you drop below that pivot, you're probably going to go down, right? Because these pivots like represent where probably institutions and people have a lot of stops, right? It's like if it's going up, well, I'm going to put my stop right there, because if it gets below it, I'm getting out. Well, if it gets below it, guess what? It's going to blow through it because there's people dumping their stocks right there, and that's why you get all these crazy movements, right? And so here is somebody had probably a bunch of stops up here, and guess what? Boom, took it out, and now we're way up here, right? And so pivots ultimately show you changes the direction, and these this pitchfork line, because Alan Andrews was a genius. He kind of showed this as really giving great trend lines, and so here you can see we just created a pivot up here, but the reason I drew it here is because this middle line becomes significant. Right, so you can draw a pitchfork anywhere. I could draw one like here, here, and here, but that doesn't really help us, right? I mean, it kind of did, right? It kind of reversed off of this pivot right here and went down, but it kind of lost its luster, right? You want something that you can really use as a frame of reference, and so so what this does, when you draw it, if you can kind of get that median line to get around another pivot, like right here and right here, now you've got something, right? Because you can see now I'm in a channel down here. I worked around that median line. As soon as I broke out of that median line, then it came back up, and now I'm working up here, right? So now you can use that as support, which makes sense, right? Because it's the top of this pivot. And then look to see, let's say it comes up a little bit, pivots, and comes back down, maybe fill that gap, and it wants to test down here, right? And so that's pretty much the essence of it. And then the only other thing that I do, if you use TradingView, it can give you like another median line, and you can trade off of that too, right? So there's a median line, like say like there, and median line like there. They're like mid-median lines or double median lines, right? So you can see how that kind of trades out there. And then the other thing you do is a trigger line, which is you take this and you extend it out. I call it a fan line, a trigger fan line, because it's like a GAN fan. Extend that to the right, and now you've got some other areas that that lead to potentially more momentum, right, or more support and resistance. And Netflix was doing that too. So anyway, so indirectly, surely this kind of shows you SIG, right? So looks like it could go up a little bit, pivot, and then come back down. It might head back down to this 326 level. But Netflix is a really good one because it's been hanging around that trigger line for a while, and I finally drew a new pitchfork on it because it's driving me nuts. But here, right, originally there was I just drew this new pitchfork in right here, but there was a pitchfork here, a bigger one, right? You can see, right, boom, boom, there's your middle line, right, and it came here, and it was kind of hanging out under that for a while, and then you have this trigger line that comes across, and it's been going back through it, right? You know, I drew this triangle the other day, went above it, came below it, and so I was like, okay, look, this thing is chopped, we need to get a little more perspective on it, and so I drew a new pitchfork here, and so really, instead of being at the trigger line, now it's kind of essentially at this median line, and then and you can see why I drew it here. I hit it at that low, pivot low, and look, now that's serving as support, right? So it pivoted off of that. So my guess is that, you know, if we get some follow through the upside, it'll probably like come at least test like kind of this 269 to 270 area, and then we'll see if it gets any further. But I'm really looking for Netflix hopefully to break down sometime soon, because I want to fill these gaps, right? So we hit 250, but certainly we can start filling some gaps down below. And why not? I mean, Netflix is kind of overpriced anyway. You know, we barely even watch it anymore. So, and then plus they're dumping tons of money and all this like new programming too. So I mean, that's gonna hurt them in the long run. I bet you their next earnings is like over here. You know, I mean, obviously I don't trade their earnings, but I mean, I bet you it's gonna dump, then start filling some more gaps. But anyway, we'll see, right? Who knows? So hopefully that helps on the pitchforks. Quick review on it. But if you go back through my my videos, you'll see there's a link to that. Okay, next. Oh yeah, Tilray. That's going to be on the. Okay, what's a 60 anchor? A 60 anchor is just that what I talked about kind of earlier in the session. So yesterday, most of the FANG stocks except for Facebook were 60 anchors yesterday. And all it is just a term I came up with that is easy to remember, and it kind of helps because it's an anchor point for you to trade with from the prior day, right? And I trade a lot of 60-minute bars. Right? It's my favorite time frame to trade off of, right? And so at the Tesla, right, the other day was an inside 60 point of reference, right? It was your final 60 bars. So you just trade as if it's all the same trading session, right? We just get a little more volatility at 9:30 every part of the same trading session, right? And so if I had an inside 60, right, on Tesla intraday, I would look to do a break to the upside or downside. And now the open is going to give you some indication on whether or not it's going to make sense to go long or go short. Well, if all the futures are pointing down and this thing can't even hold 50% of that range, chances are you might want to try a short below that. And like we talked about earlier, if you rewind the video and go to the beginning, you'll see that this was a solid measured move at the open and really worth 9 points within like 10 minutes of the day, just trading off of that anchor point. So I call it an anchor, but you know, it's really just a 60 bar from the close that you look for some continuity in your trading. And to trade it as if it's a regular 60 bar. I mean, here, look, I tweeted this out yesterday, even the day before. Had an inside 60 anchor to the upside, so that was what I think it's 5 points to the upside. Went inside, double inside, broke up for another like 5, 6, 7 points, and then you know if you look at that as sort of a spinning top break to the downside, then you had another 338 all the way back down to 329, and then you had an inside 60 anchor at the low of that bar, which would have implied a potential measured move, and it did all the way back down. So I mean, really at the end of the day, I mean that anchor was worth. What is that? 18 points. So that's pretty good. Anyway, but that's the idea. That's what those. That's what I use as 68. So keep an eye out for those. We'll have a couple tonight. Tilray. Tilray was a 15-minute orb for today because of the news. So the 15-minute orbs, as you know, is just the first bar, and this was gapping up for some upside potential, and honestly never happened. Just kind of chopped around all day, never really broke to the downside. I wouldn't have traded it to the downside anyway. Would have looked for, you know, gap, trade in the direction of the gap, boom, to the upside, never triggered. So tomorrow it's going to be on the 30-minute orb list. Now CGC is going to be a 15 orb for tomorrow, because look, it's already gapping up because they just announced that they're going to start doing business in the United States, right? Now, just a side note, the fact that all these wellness stocks are going public and are becoming a lot more popular is actually kind of indicative of a bearish market, right? As the market declines and we head into potentially a recession, right? People tend to drink more, and I assume they tend to smoke more doobies, And anyway, it makes sense that these stocks are actually starting to do really well right now as the broader market is doing worse, if that makes sense, right? Market's going down, people are sad, so they want something to make them happy, and so they do artificial things to do that, as opposed to getting good at trading and being really happy. Anyway, let's see, what else we got? Dun dun dun. Risha, how are you? No one even have ketchup sauce. It's all far away. That's right, exactly. Carthy, yep, no problem, my pleasure. Thanks for the question. Thanks for participating. And let's see, MB, nice. Yeah, check the feed out. I post every night. I post all the FANG stocks on all their main time frames. So your monthly, your weekly, your daily, and your hourly. And I put notes on those. So if you just kind of scan through them and read the notes as you're scanning through them, you can start to look at those actionable bars that are in there, right? Excuse me, a little sip of water. Yeah, so anyway, check that, and then I do a follow-up one with just the pitchfork off of the hourly time frame, and occasionally I'll throw in some like Elliott Wave commentary, right? Tomorrow, any bounce plays or just short rallies to scalp? Yeah, so Ratio, good to see you. Yeah, so it just all depends, right? Now Nike, right? I'm gonna go ahead. I'm gonna hit on Clayton's first bar, then I'll get back to Shirley's GFI. Yeah, GSET, Shirley, that was the one. That was the one that spiked today. We'll get to that in a minute. But Nike gapping up, right? So this will be on the 15 orb list for tomorrow. So we'll look to see what kind of 15-minute bar it puts in, and we'll just look and see how strong it is. Now, if the market's super weak and it can't hold the level, and it just goes red, puts in like a red shooter, I mean, we'll look to, I don't encourage reversals, but I would look to short it, potentially there as a reversal, but only wait until your 15-minute bar comes in first, right? Because that shakes out, that's where all the indecision is in that first 15 minutes, right? Up, down, up, down, up, down. Okay, then clarity, right? Then clarity, right? Up, down, then boom, look at that orb right there, clarity to the downside, right? So that's what we wait for. So we wait for clarity in market. We want to go with the direction of the market, right? We don't want to fight it. So using those orbs really helps us, right? If we just wait and be patient for them to work themselves out. So Nike is definitely going to be a potential, but let's go real quick here to the daily on this one and see, right? I tell you, I would have bet that this thing was gonna go down, but that's why you don't trade in earnings, right? So you kind of had this head and shoulders. Now, granted, it had already broken. I'd drawn this neckline here before it already broke the neckline, but who knows? I was thinking it would get down here, to test some prior support. But we're gapping up. We're about 72. Which doesn't seem that high after all this move, but let's see. So we're getting up to 72.85, and looks like there's a lot of price continuity there. I don't see any gaps. So at that point, we just have to just trade the orbs tomorrow on this one. So that's Nike. Okay, I'm gonna just jump back up to GFI for Shirley. Goldfields, gosh, I love these stocks that you find. Goodness gracious. All right, so let's go to the monthly bar, see how it looks. Nice green month, green week. Nice cup and handle. Surely if you can catch these cup and handles earlier, like where it does this, and then just put like an alert, and look how perfect that alert would have been. It would have been right into a gap. So if you would have caught it right here, off of this bullish engulfing bar and just held through it, looks like even if you had to stop, a couple cents below it, you never would have been stopped out, and then you would have taken that neckline up all the way through the gap and up here. But nice bar today. It looks like there's some potential, some continuation. You got pivots, 1, 2, 3, 4, 5 pivots, pretty close. So 428 looks like a definite possibility. Your hourly bar to close. Looks like it's gapping up at hours, but looks like you had a nice kind of inside, possibly low, inside hammer. Even though it's red, it's over the VWAP, and then you see, boom, already up after hours. So we'll see. We'll see how it goes. But let's look, short term. I'll draw a pitchfork here. This one you can kind of draw a crazy one because it's not a crazy one, but you know what I'm saying. One that's kind of pointing up because looks pretty good. So you can see it's kind of channeling up here. So just right at this kind of median level, so you just kind of look for, again, continued break to the upside potentially, or if it puts in a pivot down. But not, penny stock, so just be careful. Size your trades accordingly. Okay, WBA is going to be on the 30 orb list for tomorrow because today was an earnings day for it, I believe. Yeah, earnings, if I'm not mistaken. Yeah, it looks like actual earnings were okay. I think some of their guidance was a little so it ended up gapping down. Got a gap above that we can work with. It looks like it closed. Is that inside 60? Yeah, low. No, not quite inside 60, but really close. Bit of a hammer bar, still below the VWAP. Definitely look for a potential. If we have a strong market tomorrow, we have a 30-minute bar that's kind of in this range. Look to fill a gap up there. This one today, I just kind of touched on this. I tweeted this out earlier. Remember, I said I tweeted inside 60 here to the downside. Watch it. The puts were like 60 cents, and not too long after I tweeted that, like it broke that 60 to the downside under the VWAP, and you'd have doubled your put value very quickly. I think it did it in honestly, it doubled in like 5 minutes or something like that. But then 2 hours later, it would have done even better. So then I put in a hammer, try to come up, hit the VWAP, stay below it, hammer to close, see if you can get a 30 orb to trade off of it tomorrow. BB, yeah, I think I saw this thing. The problem with this one, it hit this really high spike in the morning. Yeah, see, I still have an alert on this. I tried, 15 orb today. I tried, never got there. Right, so everything shook out in this huge range in this first 15 minutes. I mean, you could have tried a reversal here to the downside. It's a cheap stock, so 748 down to 730, so 10 cents. You'd have to have like 10,000 shares, but then your stop's got to be like up here, so you're risking like $10,000 to make like $500. You know what I mean? So you don't want to do that, right? So, but it's still worth watching the 30 orb tomorrow. It might not be as crazy as it was at the open today. So. Good ones. Oh yeah, SIG is up. That is good. What makes you decide to trade off the 15 or 60? So 15 is for the orbs, right? So the opening range bars. Obviously, if you get comfortable trading those time frames, you can intraday. I don't do it intraday in terms of like intraday signals. I mean, I might look for a combination that helps me with my 60s, but I trade just off of this first 15-minute bar. If there's an earnings or if there's like some big news on something like the Tilray news or CGC tomorrow, right? It doesn't have earnings, but they're going to be doing business in the United States, so that's going to be probably pretty bullish for their business. So I would look to do a 15 orb on CGC. Then you just look for you set a line on where that first 15-minute bar is, and you look for a break of it. And the preference is, and I say on Twitter, is trade in the direction of the gap. This way you don't have to worry about reversals, right? That's why, like yesterday, I said we had 3 things. We had FedEx, right? We had FedEx. Dun, dun, dun. Where's our... How long ago was FedEx, guys? 3 days ago. Goodness gracious. Anyway, 3 days ago. Time flies. I was like, oh, didn't we have earnings today? Oh, it all kind of blends together sometimes. 15 minutes, 1 day. Let's go. 3 days. Yes, FedEx had earnings here. Right? So you had that first right? It's gapping down. Unless there's an obvious indication that it's going to reverse, don't even worry about it, right? Just trade in the direction of the gap, right? So you had this 15-minute bar right here. You set a line right there. Boom, you're at 168. Even that next bar, all the way down 2 points, all the way down to like 166, right? And then you could have done it later in the day. Here, 168, or I'm sorry, or here. As it came back up, 168, and then back down all the way to 162. So another 6 points at the end of the day on that one. So just in the direction of the gaps on those. That's how I come up. The 15s and the 60s I just trade off of because I don't have the because I get stopped out more on the 15s, right? There's a lot of up and down on those, and there's a lot of up and downs on and volatile markets on the 30s. The 60s are the most stable to trade off of, and they're easy, right? There's only 1, 2, 3, 4, 5, 6, 7 bars during the day that you have to worry about. And then you trade off of those to find like a some sort of combo with a daily setup or some other something else interesting. And you'll see if you start really studying the 60s and then look at the fractal time frames off of the 15s and the 5s, you'll see the patterns that represent, like this is probably close to an inside 60, right? As it comes back up, it really is a cup and handle break on a shorter term time frame, or an inverse head and shoulders break to the downside, wherever the case is. Like you'll start to see all those patterns on the shorter time frames that really just correspond with a break of the 60 candles. And the inside ones are great, or a shooting star candle is good too, or a hammer, right? So that's what makes me look at those. Okay, gold. GOL. Gold has been pretty popular. I've seen it in FinTwit a lot, right? It's been all the way down from $10 all the way up to $13. You have an inside 60 anchor to close there. Month is green, right? So cup and handle setup. So what I would do if I were you, Shirley, is I'd draw a trend line here, or an alert line, just for when it gets back there, because it might kind of chop around, and then look later, like a couple weeks later is when it breaks that again to the upside, and then you'll capture that and then have those nice green bars up here, right? It might take out like this pivot eventually, that type of thing. I had looked at this the other day, I think. I don't know why I drew it like this. Yeah, because it looked like it was pivoting there. Right, and it kind of did, right? Pivoted, turned, gapped up, came down, pivoted. Now it's retesting that line, right? So this is just doing its thing. Right, there's your trigger line. So, I mean, it's definitely looking bullish, right? But like I said, it might kind of come back in, kind of chop a little bit, and then look for a break back above that, to take out those other pivots. AMX. We've already analyzed this before, so let's just see where we're at. Nice pivot to the downside here. Looks like it's just kind of slowly working its way up, so I would just draw a channel there, right, Clayton? Boom. Boom. So just you keep an eye on this channel right here. But it looks bullish, right? Nice pivot up. A bull flag. Break to the upside would be great. GSAT, that was the one that I opened this morning. This was great because we drew this just like last night, and then it was right. I thought it might pivot right there at the median line, instead it broke through, and so now I'd look for maybe just a slight pullback and then use this as support, and then another shot up potentially. VRRM. Wow. Glad I have this channel thing pulled up. Look at that. This also could be considered a this is a bullish triangle, right? If it breaks to the upside, it is has some potential to the upside, right? And then just watch as it keeps consolidating. Might break to the downside as well, and then just kind of start filling this channel back again. So this is good, but if it did break to the upside, I would look for at least getting to 1078 and then above there. You just kind of pull that up and you're like, ooh. Was this an IPO, recent IPO? Yeah, I think it was. I think I remember trying to trade this one and it yeah, but I remember this when it came out in October, and it just didn't do anything. Like I looked for the 15-minute orb and then 30 orb, and it just kept on going down. So yeah, but look at this kind of can't remember the exact name. This sort of it's not an ascending triangle, but it's a flat top triangle. I can't remember the exact name of it off the top of my head, but yeah, look for a break here, and then potentially get up to that 1076. And if it takes out 1114, it might go, right? It might do what it was supposed to do on IPO day. But a lot of these IPOs these days have just been puking at the open. You don't even get a chance to really make any money off, which is annoying. So I bet you Uber will do the same thing when Uber goes IPO. It'll just probably go. Lyft is better anyway. Karthik, what's up? So how do you choose what tickers go on 15 orb and 30 orb? So I just look for anything with any. I look for liquid stocks that are usually large cap stocks that have earnings. So Nike is perfect. It has earnings. It's gapping up. It's going to have a lot of volatility tomorrow. It's going to try to shake itself out one way or another in the first 15 minutes, and then you just go in the direction of the gap of the 15 minutes. Or you could look for a reversal if you're looking. Reversals are riskier, but you can usually tell from the price action, so it's a little more advanced. But the easiest rule to stick to is the in the direction of the gap. And then usually day 2, you look at the 30s. You just carry those over the next day to the 30s, because a lot of times you get some action the next day with what you would expect it to do. Because a lot of people take their eye off of it after that, but it's still, it's still got some heavy volume in it, recent heavy volume in it. It usually does some extra movement, right? So that's how I picked this. So earnings, real news, or IPOs. And as part of real news, I use upgrades and downgrades, right? So, but it has to be from a real, like a reputable, not reputable, but like a famous, broker, or analyst. So, Goldman Sachs, Morgan Stanley, Citi, those, the big names. If they give an upgrade or a downgrade, usually it'll affect the stock a little bit. So I look for those in the morning, and I look for what the earnings are. Good question. TTM, nice one. This is a Tata. Sorry, I thought TTD. I was thinking Trade Desk. Man, this thing, I remember when this thing was. Yeah, I haven't looked at this thing in a long time. But yeah, nice downtrend. I mean, you can almost trade off of this 50 moving average right here. It hits the 50 moving average, goes down. Hits the 50 moving average, goes down. So I don't know if it had any recent news. I don't know if it did well at all on earnings, but yeah. 50 moving average, go down. So that's kind of what I see there. Head and shoulder-ish type situation here. Let's see. But it's a tough one to trade like long term. So I don't know. Looks like I might try a little bit lower and then back up, type situation. So looks like a tough one. But big gap ahead, right? If it were to break out here, you got a pivot right here and then a gap above. So definitely something to look at there. And so Orb, what's going on, DJ Koi 79? Orb stands for opening range bar or opening range break, right? So you just look at that opening bar, that first 15-minute bar, the first 30-minute bar, and then you wait for it to break at some point, if it does or if it doesn't. So like today, like for instance, like Tilray, like we had that 30-minute orb. It's an abbreviation, right? So you look for that 30-minute orb. Did I say 30? I meant 15 today. Right, and you look to do a break. So I was expecting it to break to the upside, right? And then you can draw like a price line or whatever, right where that was. That just didn't do anything, right? All day. I mean, if you stared at this all day, it was probably like, especially when the market was going down, there's just nothing to do here, right? So tomorrow we'll look at the 30 and see if we can get some movement off of that. And then CGC might give it some more action too. If CGC is going up, Tilray might go up, right? So just look at the 30 orb tomorrow and the 15 on CGC. So it's just the opening range bar, and you look for a break. Right now, I wouldn't trade this to the downside because it was gapping up. I mean, you could have scalped it a little bit. Just move your stop to profit, and you wouldn't have made anything. You might have lost a few bucks, but yeah, that's kind of that. But that's interesting though. It is in that range, right, of that bar. So tomorrow, let's see. Tomorrow it might do like some sort of 30-minute bar, say like here, and then I would just look to trade that, to the upside, at some point tomorrow, right? So it breaks that, boom, to the upside. That's the orb, TTM, and then UGP. And then I gotta go to bed. Let's see. UGP, yeah, so your hourly, $12, kind of potential momentum right here. The real body is kind of at the top of there, but a little bit of a high wick on that. But again, you've got your cup and handle type situation. It's kind of breaking out there. You've got a potential pivot here at 1397. To me, probably going to do something like, up, then down. I mean, honestly, if this is a, it looks like it's probably just correcting, some sort of Elliott wave. Just say like 1, 2, and then you could have like a lot further downside on this thing eventually. Doesn't look like it can go much farther down though, does it? So this could have been like a maybe some sort of like 1, 2. There, that's crazy. Really big kind of flat type situation right here going on, and then finally get a move right here. So I would say 1, 2. Look for 2 can retrace all the way back up, so it might even come back up to the 200-day, which would be, let's look at our Fibonacci. Sorry. If that isn't end of a wave 2. I mean, wave 2 could, or wave 1, it could go all the way up to this 61.8, and it could potentially even go up to the to this level here. The what is it? 71 point. Left. 78.6. So usually doesn't go that high. So notice how though the 61.8 retracement is right at the 200-day moving average. So or 200-week moving average. Sorry, could potentially work its way back up there. So just keep an eye on it. Looks interesting. A couple breakouts though could get you up there. Good. I hope that helped, DJ. Clayton, have a good night, my friend. Yes, everybody trade carefully tomorrow. It's a Friday before the holidays. It could be. I think it's gonna be another crazy day. But either way, limited risk. Know your risk before you trade. Minimize your losses. Preserve profit, and don't go crazy, right? And but have fun. Have a great Christmas. But I think we've got. I'll be here Sunday night because I think we're gonna have a half day on Christmas Eve, and I'll actually be at home. So maybe I'll trade live that morning too. So that'll be fun. But thank you everybody for your time and for participating. And I hope you have a great night and a great trading day tomorrow. Again, if you have any questions, just you can put something in the comments here on YouTube, or you can send me something on Twitter, and or send me a DM, whatever you want. And I'll get back to you as soon as I can. Hope you guys have a great night, and I will catch you guys Sunday night because tomorrow's Friday. All right, have a great weekend, and I'll talk.